Hey everybody, it's Wednesday, August 1st, time for an update. So, in about another hour and 15 minutes, we will have the conclusion of the FOMC meeting. Now, no rate hike is expected at that meeting. However, the statement will likely be very, very assertive in letting investors and the markets know that more rate hikes will be forthcoming. Now, this goes back to all the way back to December 2015 when the Fed started to raise interest rates. And I said, this is going to go on for a length of time. You have to be short treasuries. Rates are going to go up. It is going to drive inflation higher because rate hikes are price setting and they're also fiscal expansions. Now, all of this has happened. You could look at any measure of inflation since that time. It actually bottomed right around December 2015 and started to head higher. You could even look at gold. And despite the big correction that we've had recently in gold, that's up. You can look at the dollar is down despite the upward correction that it has had recently, etc. As far as the fiscal expansion, we see it. We see it in the growth in the economy. All right, so all of that has happened, and I said that the real bet we were making was not necessarily on rates, although that was an easy call because the Fed is the rate setter. We said we are betting on central banker behavior, and they all behave the same. They're all the same. Central bankers are one creed, all right, and they observe a certain orthodoxy, or there is a certain orthodoxy to their behavior. So it's very easy. I mean, it's like if you're playing poker and there's a guy at the table and you know how he plays every single time he plays the same exact way, it's very easy to beat a guy like that. So all of that is coming true. So again today we have the 10-year yield hitting 3%, slightly above. And a lot of you here, you were mocking that. You were saying, oh, it's never going to break the line, and 3%. It's going much higher because the Fed is going to, actually, we're probably now getting into a phase, another phase of this whole entire rate hike program. And this is a phase where there's going to be more urgency on the part of the Fed. I mean, they saw the 4% second quarter GDP print. They're seeing inflation pick up. They're seeing wage cost pick up. I talked about that yesterday. So there's going to be an urgency now in their desire to raise rates. And that's something we haven't seen before that's very significant. All right, so we have that going on. Now, another thing that's going on more or less from a geopolitical point of view is the United States now is preparing sanctions against Turkey. Turkey is holding a U.S. citizen, I believe a Catholic priest or some member of the clergy, and they are not releasing this guy, and the administration is preparing sanctions against Turkey. Now, why is this important? It's important for a number of reasons. First of all, Turkey is a NATO member, and it is not just an ordinary NATO member. It is a hugely important NATO member because it straddles Europe and the Middle East and Asia. I mean, it occupies, Turkey's a big country. It is where the U.S. has military bases where it can easily access the Middle East. It is a vital and strategically important asset for the United States. Now, it's one thing for the United States to, impose tariffs on Europe or European countries. It is one thing for the United States to impose sanctions on Russia, which the United States views as an enemy or at least an adversary. But it is a completely different story for the United States to we're not talking about tariffs, but to impose sanctions on a vitally important NATO member such as Turkey. All right, so this has big consequences. Now, for those of you who continue to mock or disbelieve my call about the de-dollarization. When you have things like this happening, all right, where basically if you want to go back and look at the history of since the fall of the Soviet Union, when at least from a geopolitical standpoint, we went from a bipolar world to a unipolar world where the United States emerged as the single superpower in the world. Now, that has been a paradigm in effect since that time, since the fall of the Soviet Union. We're talking 1990. All right, so basically almost for 30 years, 28 years, that has been the way the world worked. It was the United States, and that's it. And of course, from a monetary standpoint, it goes back further. It goes back to right after World War II with Bretton Woods, when we were basically on a dollar standard, okay? And we still are. But this shakeup with Trump now coming into the picture, and basically as a result of tariffs, trade wars, sanctions, etc., you're starting to see a realization among nations, and not just adversaries, but allies of the United States, that there needs to be another system. Now, like somebody said here, well, what happened to this nonsense of your de-dollarization, Mike? This does not happen in 4 months. Come on, people. Use your brains. You're talking about a system, a global system that hasn't been in place for really 70 years, or if you want to go back to, the fall of the Soviet Union, but combined, you're really talking about 70 years. So something, if it's not obvious to one person here or a couple of people that it didn't happen in 4 months, suddenly they're writing it off as nonsense. That alone, that statement is nonsense. But there's no question right now, absolutely no question, and you can see it happening. You could see it happening in bilateral agreements on trade that did not exist before in local currency between places like Russia and China, or China or Iran and other countries, or Venezuela and Russia, or Venezuela and China. You're starting to see this. Whereas prior to this, the arrangements were always settled in dollars. All right, that's one thing. That's from a monetary, financial, transactional perspective, but also from a geopolitical perspective. For the United States to attack an ally, and again, this is not a trade war. This is at a higher level. These are sanctions. All right, this is a direct punishment above and beyond, or beyond anything related to narrow trade issues like, you're not letting us sell enough cars in your country, but no, this is directed as punishment against a strategically important NATO ally. I mean, you really have to think about this. Now, I spoke about how I gave the analogy of the movement of tectonic plates. All the continents sit on plates on the Earth's crust. They move around. You do not see that happening with your eyes, but that's measurable. That happens. That changes the entire look of the globe over time. Same thing here. So we are positioned, and this is a big macro trade. And it's not like you got to wait. It's not like, I guess where the tectonic plate analogy does not apply. You don't have to wait millions or billions of years. But it will play out over time. It will play out over a period of years. But there's no question that this is happening. Nobody sees it. Very few people see it. It is being spoken about. It is being written about. But I think from an investor standpoint, because the mentality has become so short term. Like what happens today? Look at what happened today. There was an announcement that the United States is preparing sanctions against Turkey. You had a big sell-off in the Turkish market. You had the Turkish lira going down again, where it had been stabilizing after last week when I made the video where I talked about how the Turkish central bank did not raise interest rates as expected. All right, that was the first step. And Erdogan, he understands this. He has been talking about the effect of rate hikes, how it makes the currency weak, how it increases inflation. He understands MMT, so they stopped doing it. That was a good, positive step. But now you get the sanctions announced. And we don't know if it's going to happen. They're preparing sanctions in the case that negotiations fail. So anyway, I wanted to update you on this and also to let you know that at the end of the Fed meeting today, which is in about an hour, you're going to see the typical zombie reactions most likely. But that's what they are. We've seen them over and over and over again. They do not last. All right, so let's wait and see what happens. I'll be back later. Bye-bye.